Today I want to do a deep dive into one of the two stocks that I recently bought. Now, my last video I shared some big portfolio changes I did, so you definitely want to watch that. One of the stocks I bought was Union Pacific, but I've already done some detailed videos on that, so I'm not going to do one anytime soon. But the one I want to share with you guys is my new stock, S&P Global. Now, let's start this video off with looking at my portfolio performance. This is something I do with every single video. I want to be transparent because I am putting forth my strategies, and I think it's a good thing to follow and see if they're working or not. Now, I know a lot of other YouTubers might not share their performance of their portfolios, which is fine, I get it, but I just think it's best to do so. And so if you like that type of content, be sure to subscribe. Now, I am down a little over 3%, that's $1,700 of unrealized losses. And I want to focus your attention on the very top right in the financial sector, my new stock, which is S&P Global, or ticker symbol SPGI. I'm down 3.86% right now, but I just bought this last week, so I do expect some downward pressure, but long term, I think this will be a huge win for me. It's already 7.55% allocation of my portfolio, so I'm betting on this one big, and I will be adding throughout this whole year to make it a decent position of mine. So before we dive into S&P Global, I do want to touch base on all the recent 1Q earnings. Now, this chart shows here all of my companies that I held or did hold recently because I did sell some of them, but I've covered AbbVie through Coca-Cola, so I want to cover the last four quickly. The REITs did well. Realty Income and Vici both beat on their earnings and revenue, but I will say this with the REITs, a warning that I have is with the economy getting tougher, a possible recession, the thing to focus on is lease renewals. Will a lot of the properties that these companies hold with the businesses be renewing their leases if times get tough? I think Vici's pretty protected here, but Realty Income might see some pressure, so something to keep an eye on. Home Depot had a mix of earnings. They beat their earnings per share, but missed on revenue. And the CEO said, they're kind of expecting some slowdown. I will say this with Home Depot. I hold the stock because I feel it'll be around for the rest of my life and will perform well over that time period. And I think with the recent economic conditions, we will see some slowdown, but I have a bullish side to me here that I want to share. Since the pandemic, we had an influx of new home buyers, people flipping homes, renting them out. And I think that's going to create years and years and years of people updating and renovating their houses that they've just recently, bought or acquired. And so I think Home Depot will perform better than many are expected. And then Warner Bros. Discovery, they missed on their earnings and revenue. Not a surprise here. This company has a lot of debt and it's struggling with profitability. So I think it'll be a while before it turns things around. I do want to sell out eventually, but right now I'm just holding because I think I can get out at a profit someday. And then the last one is Tattooed Chef. They don't report until March 14th or around that area. I forgot the day. But I will be doing a dedicated video on this. This is my biggest failure so far with the companies that I've bought. So I'll be sharing much more on that. So be sure to stay tuned. Now, overall, we see, a mixture of red and greens, maybe a little bit more green, but I think this is a sign that things are starting to slow down. I think the next couple quarters we'll see more red than green, which could mean that recession is going to hit. But we will see. For right now, though, I want to jump into the video of S&P Global. Now, this is an American publicly traded company that's headquartered in New York. Its primary areas of business are financial information and analytics. Now, this company has a history dating back to 1888. So that's over 130 years of, history, which is great to see. Now, this S&P Global is the parent company of many divisions. So you will see here S&P Global Ratings, S&P Dow Jones Indices, S&P Global Commodity Insights, S&P Global Market Intelligence, S&P Global Mobility, S&P Global Engineering Solutions. Really, what they focus on are these areas, research and insights. So they focus on opinions, trends and research on global challenges. They focus on technology solutions. So they enhance workflows, increase efficiency, and optimize business processes. They look at data and analytics, so the forecasts and tools to uncover insights and unlock new opportunities. And then ratings and benchmarks. So they're helping people make assessments and manage risk and return. And I think the rating side of things is what they're most popular and known for. So I do want to look at that a little bit more here in a minute. So they say, at S&P Global, we focus on powering the markets of the future. Throughout our history, the world's leading organizations have relied on us for essential intelligence. They need to make confident decisions about the road ahead. I want to focus on those two words, essential intelligence. I think that's what describes this company as a whole. They are providing this essential intelligence that companies depend on in order to make decisions, in order to do a lot of the business maneuvers that they make. And I think that creates this company as one that is extremely solid. And we're going to go over a lot of other things, but essential intelligence, I think, describes this company if I had to put it down into two words. They say we combine data, technology, and expertise to unlock the world's most expansive insights across markets and industries. So recently, they did a merger with HIS Markit. Now, HIS Markit is a world leader in critical information, analytics, and expertise to forge solutions for the major industries and markets that drive economies worldwide. The company delivers next-generation information, analytics, and solutions to customers in business, finance, and government, improving their operational efficiency and providing deep insights that lead to well-informed, confident decisions. HIS Markit has more than 50,000 business and government customers, including 80% of the Fortune Global 500 and the world's leading financial institutions. So this merger to me is just helping S&P Global expand into other areas and strengthen the current ones that they have. So a great move by them, and it's only going to strengthen their future. So I want to discuss a little bit about their credit ratings. That's what they're mainly known for, but as we saw, they're diverse in so many other areas I don't think people really know about. But as far as their credit ratings go, the credit ratings are opinions about credit risk. So their ratings express opinions about the ability and willingness of an issuer, such as a corporation or state or city government, to meet its financial obligations in full and on time. Credit ratings can also speak to a credit quality of an individual debt issue, such as a corporate or municipal bond, and the relative likelihood that the issue may default. So they have here ratings from A through D. Now the top two are considered investment grade, AAA and AA. Now AAA, as far as the stock market goes, there's only two companies that meet this, Johnson & Johnson and Microsoft. And you bet you holding that high rating garners them business, allows them to, get loans very easily, and it just does so much for these companies. It really is an essential thing to get rated, so that way others can look and make business decisions, make investing decisions, all kinds of stuff. So this is very important, and why this company is so essential, that word again. So they have A through B through C and even D, where companies may be defaulting on their payments at that point. So I hope you kind of see now how diverse this company is, what they do, what they provide. And I know I get a lot of emails at work with, different insights to the market, to the economy, to different things. And you'll see down at the bottom, it comes from S&P Global. So I think a lot of the research and data that you see, you might be surprised it's probably coming from S&P Global or one of the other three major rating agencies that also provide market intelligence, which is Moody's and Fitch, but S&P Global is the biggest of the three. So let's now look at their performance of their stock and go into the financials and kind of tell you why I bought this stock and why long-term I think it'll be one of my best performers. So over the last year, this stock is down 15.63%. But I think this is the market in general. A lot of companies are down this year, even a lot more than this. So I think it's holding up pretty well. We take that out to 5 years, it's up 78%, which is market beating. And you'll see it's kind of had a downtrend since the beginning of 2022. But if we take it out to all time, this thing has been a great performer. This company up over almost 6,000%. You will see from about 2007 to 2013, it had a dip. What I will say there is that's 7 years of a dip. But this company now, I do not think it will see that. Maybe a few years of a dip with the economy and everything, but this company is much more diversified than it was back then, and I don't think that history will repeat itself when it comes to that. And that's why you want to make sure, though, when you're investing in companies, you want to have that long-term horizon because, as an investor, you want to make sure when you add to companies, you have a 10 plus year time horizon, because that's what I am. I'm a long-term investor. I'm not a trader. You're not going to see that with me. If so, then this might not be the company for you, but long-term, I think this is going to generate great returns for me. So let's look at their metrics. We'll see here their PE ratio over the trailing 12 months compared to the 5-year average is a little unfavorable. It's a little higher, but I still think this company is fair valued and in a buying range for long term. Now, its trailing 12 months EPS is down 16%, but we're seeing that with the broad market. A lot of the companies I've covered, their EPS is going down as well as their revenue, but that's a different story for S&P Global. It's actually up a massive 34.76%, which shows the strength of this company and how this company is essential. Now, its operating cash flow over the trailing 12 months is down 27.5%. They did do that merger, so I wonder if part of that is, just affecting its cash still in this first quarter. But regardless, over the last 5 years, they're up 20.5%. So they have been performing well, and I have no worries with their cash flow. It's very healthy. Now, their dividend yield is a little over 1%, but you get good dividend growth. Look at the growth over the last 1 year. It's 16.88%. That is great. And with a long-term hold, if they keep up these great increases in their dividend, that means I'm going to be making some good money on this long term. Now, with their dividend payout ratio, it's at a very healthy 35%, so I feel their dividend is not at any kind of risk. And if we look at their gross margin, this is very healthy. This is exceptional. This is 66.32%, and I'm going to talk a little bit more about their margins here in a minute. Return on equity is 8.51%. Now, out of context, you might think this is really low, but when you bring it in and you look at the industry averages, this is right about the average with the other companies like S&P Global. So that's when you got to do your research, because you might look at this and be like, oh man, their return on equity is not that great, but compared to others, it's right in line. Now, the one thing I love to see is a low debt to asset ratio, and they have low debt at 18.47%, which is phenomenal. That means this company can survive and even thrive during a downturn. They are bringing their shares outstanding down, which is great. That's how they're returning back profitability to shareholders as well. And their market cap's at $110.5 billion. So their metrics to me are stellar. When this time of the economy, we're seeing a lot of companies have some really negative metrics in a lot more areas than just their trailing 12 months EPS and cash flows, which the cash flows I really do think is somewhat tied to that merger they did at the end of 2022. Now, margins. We look at their profit margins, all the different measurements. They're stellar compared to the capital markets average. There might be a few that are in line, but this means that this company is dominant in their space. This is providing them a huge advantage, and it's providing investors a lot of stability with this stock. So their margins are exceptional. Now, why did I buy this stock? Well, I've touted this before. I made a quality checklist. I'm sticking to it. So let's see how I did. So this is an essential business, from rating to providing, intelligence on different sectors of the economy. It really helps businesses make decisions. And you bet that these companies need these ratings in order to do business, because other companies are going to come in and they're going to want to know what they're rated. So to me, that's dependability with its products and services. And it's creating these repeat customers because they're constantly being rated, which means this company's bringing in those fees to rate them. And that's just a check mark on that products and services. They have a good ecosystem. They have that customer dependency. And it's almost like a subscription, right? You're going to get rated year after year, and that's the repeat customer. So green check mark there, which leads me to bring that they do have a wide moat. They are expanding divisions. They have a lot more divisions now than they ever had, which is great. And they're expanding their competitive edge by doing that. So I really think this company, also that it's the largest of the three rating agencies, Moody's and Fitch, they're just going to be a very hard company to disrupt or replicate. And they're in this kind of triopoly, shall we call it, with the other two, but they're in first. And I love that. So I think they have a very wide moat and they get a check mark there. As far as financials, they have solid financials. To me, when you have low debt and high margins, that's going to equal profitability and a strong future. So I give them a check mark there. Brand recognition. They are the largest of the three, as I said. So you bet you that this is a company that is highly sought after to get rated by. And I think that they get a check mark here because that means they have staying power and future growth. Now, good valuation. This one I'm giving a green check mark because for long-term investors like myself, I think this company is going to be an investment that is going to beat the market more times than not, which means long term, this should make you some awesome profits And that's why I give it a check mark here. Short term, you can maybe argue this. Now, they've recently gone down to as low as $280 per share, but as high as $470, and now they're in the 330s. So really, I don't like to really focus on timing the market. I just like to buy good companies, and that's why I think this has a good valuation. Now, the management team I think is good, and I give a green check mark here. They're delivering proven performance financially. They're making mergers, so they're expanding their business and creating a bright future. To me, those are all signs of a good management team. So what this means is all 6 of these quality checklist items get a great big green check mark from me, which led me to buy. And I'm sticking with this quality checklist, and that's why I bought. So you can let me know what you think of S&P Global. Do you think I made a good investment? Do you agree with my quality checklist and why I gave it a green mark on every single line item? And would you be willing to buy this company, or do you hold it? And I just think that this was a company, when I looked at it long term, I think it's a no-brainer. I think they're an essential business, which means they're going to be one that's bringing in those profits and growing themselves probably the rest of my life. That is something that is essential, not just the rating side of it. That's what people think, but all those different divisions, they're providing essential intelligence for these companies to make business decisions, to create efficiencies, so on and so forth. I think there's so much to this company that people don't know and don't think about. They just think of credit rating side of things, which is a good part of its business. And with the market going down, many people are like, hey, it's going to affect this business. But they have these other divisions, let alone people are pouring into bonds. So this company will be busy rating bonds. So I see a business that is very essential. And it's not just about the credit rating side. There's a lot of other things that, it does. And I don't think people know that. And so I hope that brought some light for you guys that this is a very diverse company with a wide moat, good profitability, I think an excellent bright future, which is why I bought in. And with the market going down, the stock side of things, the bond side of things is going up. Everyone's pouring into bonds. So this company is going to be very busy rating all those bonds. There's just a lot to this company that I love, why I bought in. So I'd love to hear your feedback. And if you think this was a good move, and of course I'm making a big allocation of my portfolio, a big part of it, and we'll just see how it does for me. But I think this will help me to possibly beat the S&P 500 performance long-term with a company like this. So thank you guys very much. I appreciate watching this video. I'd love to hear your feedback on this new stock that I hold. And maybe if there's something that I didn't cover about this company that please share so we can all learn together. But with that said, I hope you guys have a great day, and we'll see you very soon on Mark Arnold's Finance.